Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Mark Yaxley. He is the managing director at Strategic Wealth Preservation. Welcome back, sir.
Hey, Ivan, good to see you.
Yeah, it's great to see you. I wanted to bring you on to talk about precious metals, gold, silver, everything that's happening in the economy. First, though, let's start off with, what factors do you believe are driving the recent fluctuations in the price of precious metals, such as gold and silver, Mark?
Yeah, we've seen quite a bit of volatility in the prices, Ivan, over the last few weeks. Gold, look, it is up 16% so far in 2024. Silver is up 17%. Gold hit an all-time high on July 17th of 24.85, but then it came down significantly by about $100 an ounce,
Right.
$125 an ounce, and silver dropped by about $2. A lot of that is probably related to some profit taking that we're seeing. The metals, again, gold traded at an all-time high. You're going to see some people take some profits off the table. And silver, up at $31, $32 an ounce for those silver bugs who have been waiting a decade to get closer to the price they paid, or, made finally a little bit of profit. They're taking some profits off the table there. And also we are seeing a little bit of a slowdown in jewelry demand, which is still a major factor in the gold market and the global gold market. Because the prices are so high, you've seen a drop in demand for jewelry. And you're also seeing a little bit of a slowdown in the ETFs in North America. There had been net inflows for a few months earlier this year, and now we're starting to see some small outflows from the ETFs.
Absolutely. And I wanted to talk to you about, like how can the individual out there effectively diversify, their own investment portfolio with precious metals in today's economic climate?
Well, first things first, you need to have an allocation to precious metals. That's step one. If you haven't come to that realization yet, just look at the charts going back to the year 2000 through today, and you're going to see that there is pretty strong appreciation, about on average 7 or 8% for the price of gold over that time. So it's really important that you actually come to the realization that you need some precious metals. The second part you're going to have to, come to terms with is, what is your allocation going to be? Traditionally you hear the 5 to 10%. Some, people that are loyal to precious metals are going to be closer to 20%, 25%, but at
Right.
least come to terms with that initial allocation and how much of your portfolio is going to be. And then your third decision that you're going to need to make is, what vehicle are you going to use to gain access? Are you going to go with physical precious metals? Are you going to go with ETFs? Or are you going to go perhaps with mining stocks, which is not actually owning the underlying commodity, but it does give you exposure to the precious metals price in a sense.
Do you think it'll be ever possible, or will it ever be successful for like a gold-backed blockchain around the world?
Yeah, there's some really interesting projects underway. There have been for a number of years. There's one that's kind of risen to the top, and I will fire you the name once we get off. I can't remember it. I don't want to misquote the name, but they're
No
working
worries.
with the LBMA, with the London Bullion Market Association, to try to bring all players, so you're talking mines, refineries, transportation companies like Brinks and Loomis, and finally vault and storage providers like ourselves and some of the bigger players, again, like Brinks and Loomis, that do storage all over the world. They're trying to create basically a network where all of this information from mine to storage can be tracked.
Are you looking for the best place to invest in physical silver and gold? Support your stack, an American small business, by shopping with www.bullionbrother.com. Let them help you break away from the financial system and become your own bank. Gain financial independence and protect yourself from reckless government spending by stacking physical gold and silver. Check out the link in the description for the best deals online. At Bullion Brother, their mission statement is to distribute more ounces of precious metals into the hands of more everyday people. They are a new family-owned and operated bullion business established in 2020. Unlike the big box bullion retailers, they are a company of stackers designed for stackers. Use the coupon code SILVERAPE24 for $5 off your first purchase of $99 or more. That's BULLION brother.com. Thank you so much, everyone. Right.
Every individual bar, every ounce of gold or silver that's produced. It's a massive undertaking. They're in the early stages. They are getting some buy-in from the industry players. So to answer your question, do I ever think it'll happen? It may. I'm not 100% certain, because we all work in this kind of like fractured industry. It's not as tight of an industry as, even, for example, the banking industry is. There's a lot of individual players involved.
Right.
and different regulators involved. But the early groundwork is there, and thus far the proof of concept has been successful.
What worries you right now in the markets, the financial markets, or just the global economy, Mark?
Well, I mean, I think one of the things that was worrying me has become pretty apparent over the last few weeks is the overbuying of the tech segment of the stock markets. You were seeing, people just chasing profits
Right.
and chasing somewhat ridiculous valuations in terms of the tech sector. That started to come down, so a little bit less concern there, but that was definitely overbought. You've got the interest rate. We've seen the Canadian central bank make two cuts consecutively. They seem to be kind of taking the lead, which is a little bit surprising because you don't usually think of Canada as a country that takes the lead. We tend to follow.
Right.
So obviously keeping, a close eye on the Fed's actions and if they are going to start cutting, at the meeting that's upcoming, or if they're going to wait until September, that's going to have a pretty major impact. You've still got a lot of worries in China. The economy there has slowed. The real estate market, which was a really hot topic a few years ago with all kinds of bankruptcy issues and financing issues, it's still a problem for their economy. And when China coughs, obviously other nations sneeze. So there's some impacts there to be mindful of.
Absolutely. I want to talk to you about like what got you started in the gold and silver industry. Do you remember your first gold and silver purchase?
Wow, that's a good question. I was going on 19 years ago. I was 26
Nice.
years old, working in Montreal, or living in Montreal. So ended up working for Kitco Metals.
Oh, no way.
Well,
You were at Kitco.
yeah. I started my career at Kitco, 7 years with Kitco. That's where I learned the business. It was a great school for learning about precious metals. A lot of us were in
Nice.
our 20s, and we had exposure to this great company and great leadership that taught us a lot about the industry. But honestly, I mean, I can't remember what my first purchase was. It was probably a silver maple leaf, but
Yeah.
I've sold it like 10 times over since. I don't recall anymore.
Oh, that's too good. So, a lot of people have been discussing lately about, the central banks. Central banks are buying so much gold, and people are whispering that, they're preparing for something that's going to be catastrophic. But China has been buying gold consistently, but recently have been holding off. With the central banks, though, Mark, are they preparing something that we don't know, or are they just they're going full speed? What do you think about that?
You could speculate, and people will speculate as to what they're doing and if there's going to be some sort of gold-backed currency, at least a portion of a currency, or there's going to be trade settlements, that are more reliant on gold than they have been over the past several decades, where it was almost completely reliant on the US dollars. You can certainly speculate. I mean, I've not seen enough proof of that to make a determination yet. I think what they are doing for certain is they're hedging against geopolitical risk. Um, do they know things that we don't know? Yes, of course, there's a lot of probably military secrets that these governments are aware of, or other information that the general public doesn't have access to. But even without the specifics, I think the general public is keenly aware these days that there's a lot of instability in terms of the wars that we see in the world, in terms of the politics and the elections, the choices that people are making about their government, and how much that's going to throw off the balance. When you look at the US, where you look at the Democrats and you look at the Republicans, the gap is so wide in their belief systems right now that if the Republicans are elected, obviously it's going to have a major shift in their policy changes, their foreign policy, their economic policies. That's
Right.
happening in multiple countries this year, and in big players like the UK and France and the States. So that all of that creates this vibe of volatility and uncertainty. And I think that's what the central banks are hedging against. And also diversifying their portfolios, because they got away from gold for a long time. Central banks were not as active buying gold for many, many years. And now I think they see the sense in buying gold, and expect that to continue. We're still seeing, like you said, really strong gold buying, especially from Eastern countries, and not to mention Eastern investors who seem to be more, woke to the power of gold and silver than us in North America.
Yeah. Well, what do you think would happen if, let's say, next week the Fed comes out, they cut rates by 50 basis points? What do you think the first reaction is for gold and silver, up or down?
Well, first of all, I think 50 basis points would be surprising to anyone. So
Mm,
that would be a wild day in the markets
yeah.
versus a 25-point cut. The expectation is that, interest rate cuts are going to be positive for gold because, despite gold doing so well over the last 2 years, they've done it in the face of competition, the competition being these high interest paying financial products. You could get into a GIC, even you or I could get into a GIC at like 5.5% for a while. As those interest rate comes down, as banks pay less interest as a result of that, then gold has less competition in theory on those
Mhm.
interest bearing products. So the expectation from market analysts is almost a strong consensus that we will see gold react positively. It might not be on day one of that cut. The
Right.
hours following the cut are always kind of wild. But if you give it, 2 or 3 business days for the initial trading to flush out, then you'll probably start to see upward movement for gold again.
Absolutely. Mark, it's such a huge pleasure having you come down to Wall Street Silver. As always, huge, huge pleasure. The market is incredibly uncertain, and there's just what you were saying earlier with the tech stocks and the AI now, like you don't know how much volatility there is out there, but it's such a huge pleasure having you come down to Wall Street Silver. We'd love to have you back on as the market develops.
Yeah, I mean, anytime, you just let me know. Thanks for having me.
Awesome. Talk to you guys soon.